With a dovish Fed flying around that only sees rate cuts ahead, are the bulls back in control? Let's go. Jerome Powell was a complete dove on Wednesday, and for a couple days this week, as we'll see later, we tested and retested the bottom of the range, but finished the week putting in what we call a hanging man candle. Does this mean that the bulls are losing control, as the bears were able to tamp the market down a couple times this week? I'm pretty sure many traders are asking if they should have bought the dip and wondering what's ahead. We'll cover this and more and get back to SPY Weekly in a bit, but first let's look at a heat map of the weekly, as this will help us focus on the S&P sectors, and then we can get to more on the weekly chart. Honestly, not liking what I'm seeing here with continued strength on staples, utilities, and now even healthcare in the mix, as this is where the MMs park their money when they can't go into cash if they think a deeper correction is going to occur. No love lost with seeing energy get hit, as when energy is doing well, nothing else is. And financials, having a retrace isn't that crazy when you look at the epic run that they've been on. If our dovish Fed is right about the next move being a cut, then things that aren't on this chart like bonds, TLT, ARKK, and other interest rate sensitive items, they could start to really run. And with the majority of earnings behind us, and especially when it comes to the big dogs, in an earnings season that has featured a high percentage of beats, maybe it's time just for the market to run a bit. If we flip over to the percentage of S&P 500 stocks trading above their 20-day moving average, we see breadth improving as we come into this 200-day simple moving average. If we can start to get above this guy, then I'm going to start to feel like maybe this was a pullback versus a correction. And when we look at the percentage of S&P 500 stocks trading above their 50-day moving average, this doji candle is telling me that right now maybe this market's making a decision on whether it wants to trap traders and go down for the next leg lower, or a signal, let's start to move higher and continue that bull trend. So let's flip over to SPY Weekly to get more clues. When we look at this weekly chart, we see that for 3 weeks now, we've retested this 20 simple moving average. And holding this area is extremely bullish, as the 20 SMA is the bull trend's friend. And even though, as I mentioned earlier, this is a hanging man candle this week, which typically isn't great news, we did hold and finally close above this 5 exponential moving average. And you can see that when we've done this in the past and we're able to hold and close above this 5 exponential moving average, it's been bullish. So when it comes to trading candles, what we don't want to see here is follow through to the downside, as that gives you confirmation when you trade candles. We'd like to see us go ahead and either move sideways or close higher. If we flip over to the SPY Daily briefly here, we can see these red trend lines here and how price has been respecting them. And if you look at this, it's looking like nothing more than a bear flag here. That is why this 515 area right here is so important. This area right here, which isn't that far away, represents the 65% retrace area. So we went ahead and went lower, and then we retrace up 65% of the fall. And essentially, if we get rejected here, we're likely to stay back in range, and it wouldn't be that odd to bounce around here until we finally get to CPI to make a decision. Now, trading corrective waves can be very frustrating and painful, and typically that's why I lock in profits sooner. But one thing for sure is if we can get above this golden pocket area, then I'm going to be full bull. But if we go ahead and we do end up bouncing around in this range until we come to CPI, if the CPI and PPI print are hot, then we're going to go ahead and go to the next leg lower. Flipping back to the weekly, if you're finding all this helpful, then go ahead and subscribe, or better yet, join the Discord, where I give traders what I'm thinking before open and after close, as well as the algorithm signals on over 70 equities with my feedback on whether I'm entering or staying on the sidelines, as algos can't account for everything. Also, as the Discord will be having a birthday next month, anyone that joins now for the low introductory price will keep it as long as they stay an active member, just like all the other current active members, as I'll be raising prices next month for any new members. Looking at this MACD line, we see that the MACD line stays below the signal, and it looks like momentum is increasing to the downside. Remember, when we look at a weekly chart, These candles take a lot more time to take their shape and make their moves. So the fact that, we had this MACD cross, that is something to be concerned about on the weekly. As if you look back in the correction in July, you'll see that, we went ahead, we went lower once we made that cross. We even came back up for air, and then we took that next leg lower into what was the wave 3. Are we setting up for the same thing here with this hanging man candle to go ahead and only move lower? And if we flip over to the Qs weekly, we see here that the Qs look a little weaker as they were not able to hold the 20 SMA. Instead, they spiked through that. But more or less with a hanging man candle, this chart looks pretty much the same. And one thing we notice here is a narrowing of the Bollinger Bands, and we saw something similar on SPY. I didn't point that out, but this narrowing of the Bollinger Bands means that an impending move is coming. We just don't know the direction. IWM, I went ahead and zoomed out a little bit further in time, and you can see that we talked a lot about this trend line last week and the fact that we actually closed below that. We kind of lost that trend line area, and I was hoping to break range here of this area and move higher, and we were able to do so. But again, when we look at this, is this nothing more than a bear flag retracing to its golden pocket before heading lower? And we see the same thing with the Bollinger Band squeezing here. So this next move, it'll be a big one, whether it goes up or whether it goes down. Essentially, this would be your wave 3 for IWM, which is the longest wave. So if this starts to go negative, that is something you don't want to buy the dip on. But again, if we're able to break through this area, trust me, these Bollinger Bands, they'll expand once again. Looking at the economic calendar next week, there's really nothing on the docket except for Fed speak. And if JP Minions can perpetuate the same message he gave, then the bulls will be on parade. As that's all I have for now until the next video, and we'll see you then.